Show me, everybody, how are your energy levels? If the floor is low and the ceiling is high, show me how are the energy levels in the room? Okay, quite good. But we're going to need full energy and focus for this next session. So do what you have to do. Take a stretch, take a shake. We need high energy audience for this. So it is my honor to be introducing to you and to be moderating a super curious concept today called the reverse pitch. So over the last many years, we've had hundreds, maybe thousands of entrepreneurs on the stage at Change Now, pitching their solutions. What we're going to have today, in a novel twist, is for the impact investment funds to have their time in the spotlight, their time to shine, pitching their own investment theses, their own theories of change, what is unique about them. And we're going to have 17 different impact investment funds from different countries of different sizes, representing, I think, super cool diversity of the sector. And on the front rows, we have some limited partners, LPs, who can maybe support them with interesting collaborations in the future. How it's going to work. Each impact investing fund will have 4 minutes, 240 seconds to pitch their solution, their fund. Then we will have 2 minutes of questions and answers from the LPs on the front rows. My name is Nick McGurl. I'm your MC for today, and I'm also co-founder of 2 organizations, Changemaker Exchange and The Possibilists, which are all about finding the next generation of young impact leaders. And I'm very happy to say I've seen a couple of them in here, and one who will even be pitching today. And the limited partners on the front row, we have Natalia from Swen Capital. We have Silvana, also from Swen Capital. We have Gianluca from EVPA. Hans from AXA IM. Jan from BNP Paribas Agility Capital. And Alexandre from Phoenix Capital Group, who'll be asking the questions. All clear. I want to also test how good an audience are you to give the pitchers their best experience. So let's imagine someone has come onto the stage and given you a super beautiful, sharp, clear pitch. What is your reaction going to be? Okay, not bad. Now let's imagine someone's come on, given a pretty shitty, not so good, not so clear pitch. What's your reaction going to be? Yes, exactly. So it doesn't really matter what you do. Okay. So I'm going to now invite the first fund on. This is the pioneer of impact investing in Spain, all about empowering, caring, and regenerating. And this is Creas Impacto 2. Welcome.
Thank you, and good morning, everybody. My name is Lara, and I'm a partner at Creas, and I'm very happy to be with you here today to tell you more about Creas. At Creas, we dream of building a more meaningful world, what we call a world in more harmony, a world where the well-being of people and the planet are put at the center of every single one of our decisions. And we've been doing so since 2008. We were very well presented, the pioneers in impact investing in Spain, and we've been pushing the sector forward since then. We launched the first vehicle in 2012. We launched the first registered fund in 2018. We were the first B Corp fund in 2020, and we were also co-founders of the Spain National Advisory Board 3 years ago. Since then, we've made over 20 investments in impact companies. We've realized 6 exits with multiples over 2 times returns. And with our current fund, Creas Impacto, we are reaching over 1.2 million people each quarter, saving 32,000 tons of CO2 and creating meaningful changes in sectors such as inclusive employment or elderly care, among others. As was already said, we focus on 3 main impact topics. We invest in impact-driven, innovative, and scalable entrepreneurs that are either empowering people, so we invest in education and inclusive employment. They are caring and improving elderly care or well-being, or they are regenerating the planet with a particular focus on circular models and regenerative models. We currently have a portfolio of 9 companies that are doing exactly this. They are solving key challenges for our society, such as school dropouts, the digital skills gap, empowering migrants. They are improving elderly care, giving access to mental health, improving nutrition, improving mobility, or promoting new models in circular models in fashion and electronics. And we are able to do this because we are a great team. We are a team of 8 people that have been working together since 2018. And we are also very proud to have amazing advisors, very senior people, both from the financial and the impact sector. So I'm very happy to be here today to present you Creas Impacto 2, which is our next fund, our way to go beyond, to go deeper, to double down on the experience that we've already built throughout all these years. We see a tremendous opportunity in Spain. We have already over 250 companies that we follow closely, that were too early before, but that are getting there now. We invest mostly in Spain, which is a very thriving ecosystem with many innovative impact startups and with very few impact funds. And we want to keep focusing on companies that are creating an additional impact. We want to keep leading Series A and beyond, and we want to do so in order to be able to create that impact alpha that we're very proud of, to be able to keep adding value to the companies, to put impact at the center, and help them with people, strategy, financing, and whatever they need. And we will do so by strengthening a team. So we're launching a fund that is targeting 100 million euros. We will be investing mostly in Spain, but also in other European countries where we can add value in those sectors where we already have a lot of experience. We want to keep investing in Series A and take companies from Series A to Series C and beyond. We will invest tickets around 5 million euros to build a small portfolio of around 12, 15 companies so we can really engage with them and support them in their way to growth. So, in general, in Creas, we believe that to build this world, this meaningful world, we have to do it together. We have to join forces with other organizations that share our vision to build this meaningful world. So I'll be happy to continue the conversations with you later. Thank you very much.
Stay. That was exactly 4 minutes. Well done. Okay, we also have, after each one, 2 minutes, so time for one question from the LPs on the front row, if you have it. You have a microphone on the table in front of you.
Hello. Hi, thanks a lot. This is Silvana from Kapitaal Partners. Great presentation and very interesting approach. I'm wondering, since you're now on your second fund, what was the methodological evolution of measuring impact, if any, and what do you think are the key challenges that you faced?
I will have 2 minutes to answer that.
1.5.
Okay, no, thank you for the question. We take impact measurement very seriously. It's obviously been part of what we do since the beginning. We generally work very closely with the entrepreneurs to establish a theory of change. We establish with them around 3 to 5 key indicators and targets for at least 4 years, and we measure how much we've been achieving of these targets, right? And we generally try to, we support entrepreneurs in learning how to do this, in defining the theory of change, in understanding what their impact can be. We generally try to combine indicators that can grasp the scale of their impact and the amount of change that they're able to create, so output and outcome indicators. And then we aggregate how much percentage achievement they've achieved of this impact, right? And that gives us a social impact multiple. Many of you might already know this methodology. And for us, what's also very important is that we link our carried interest to the social impact multiple, which, as was said before, I think is something that differentiates impact funds from other more traditional funds. So thank you.
Wonderful. Thank you very much. Thank you. Okay. And so pictures, if you see me sneaking up the side, it means your time is coming to the end. I'm going to be super strict with the 4 minutes because we're a little behind. Next fund, super interesting one of the very few impact funds implementing buy and build strategies. And this is Impact Expansion. Welcome.
Thank you.
Thank you.
Hello to all of you. It's a great pleasure to be with you today. We've been in the impact investing space for 10 years, and we're launching Impact Expansion. We basically focus on creating systemic change through a fund that is doing its first close at 50 million in June. We're nearly there. We're at above 40 right now. And we'll do our final close around 150. We're focusing on 3 issues: structural unemployment, climate and environment, and bad health. And as you know, these can be significant destabilizers of the socio-political environment in Europe. So really some of the most fundamental issues, but there are also great investment opportunities if you focus on solving them. Skilling and inclusion has been one of our focus sectors for the last 10 years. So has been environmental protection and change all across the agro-food chain. And health accessibility and effectiveness is our third sector of focus. We see that there's a large number of venture impact funds, and there have been a few large funds such as TPG Rise that have been built right at the end. But there's a missing gap in the middle, and that's the one that we're filling, which is basically growth funds that can support companies further in their impact mission and help accelerate their growth, either through minority stakes or majority stakes. And in certain cases through organic, but also through external growth, which we do through a hands-on approach. So we provide strategic advice, operation advice, organizational structure, business and build-up advice and support. And obviously, we're deep impact investors. That's the only thing we've been doing for the last 10 years. And hence, we have clear impact metrics and methodologies that are part of the growth plan of these portfolio companies. We have a team with the right skill sets. François and I, the 2 co-founders of Creas, we've generated in minority deals 27% IRR in Europe over the last 10 years. And we've been joined by 2 partners who have a buy and build, a majority track record, where they have been generating 3x in Europe over the last 15 years. And we have a much broader team covering the whole of Europe with different skill sets complemented. 2 examples of deals that we have already done. So we have 2 deals being warehoused. The first one is Potential Project, which is basically focusing on the huge burnout epidemic that corporates are seeing. And that burnout epidemic has numerous consequences. On one hand, on health, on the economy, on well-being, but there's also the change in mindsets in corporates. All of you present or collaborating with large corporates know that if corporate employees are given an opportunity to align their purpose with the power of multinationals, we have a huge change agent. And that's what Potential Project is doing. Like the rest of investments of Impact Expansion, it's a profitable company with 6.5 million revenues, 2.2 million EBITDA, growing by 50% per annum. We've invested at a 13 million valuation, and they've already received an offer to be acquired 100% at 30 million, which we've refused. But so those of you who will join us as LPs, you're already in safe territory there. Second investment is in sleep apnea, SomniPlanet, offering a technology and home healthcare platform in order to leverage the benefits of connecting patients with you want to know, because maybe some of your family members have sleep apnea.
My daughter, definitely.
Your daughter. And with that platform, she'll be able to connect doctors with patients, with payers in a much more effective manner. So 2 deals already in our portfolio out of a very promising pipeline. Thank you very much.
No, thank you very much. Stay here, please. Thank you so much. Super interesting stuff, and love the focus on well-being, and anything that can get my daughter to sleep, invest in it, please. Yes, 2 minutes Q&A.
Yes, this is Natalia from Kapitaal. So as you're in the buy and build strategy, and that's great for an impact fund because there's a lot of impact funds in this segment, how do you cope with current valuations in the market? Because there's a lot of inflation in valuations, and you're facing to more classical private equity funds. So how do you win deals?
So on the valuations, our 2 first deals are proprietary. So hence, we've managed to get into these deals between 2 and 3 times below what we think the comps are in the market. Approximately 50% of our pipeline is proprietary. Having been in the space for 10 years and our partners having been in the buy and build space for 15 years, we have 40 CEOs with whom we've been working and with whom we continue to work, and then a broad network. On the other hand, we are seeking to do profitable investments, growing investments at attractive valuations, and so it's our job to just say no. I think that a lot of the deals we've won in the past and that we keep on winning is because they're entrepreneurs and executive committees who are super passionate about what they do. And the idea that their company is going to be turned around by a classic investor who doesn't have an impact mindset, it's something that hurts them, and they want to keep purpose and profits aligned, and we can hence win deals in these environments. And then there's other entrepreneurs who actually just wake up to the fact that their business has always been an impact business, but they didn't know it. And us telling it to them, showing to them how their strategy can be steered forward, they're like, wow, this is actually giving me wings. And this is what I have been doing for 5 or 10 or 15 years, but doing it with that purpose, I want to do it. And hence they come to us and not to classic PE investors.
Okay, beautiful. Thank you very much. Thank you.
Thank you. Thanks to all of you.
Okay. Next up, we have Europe's largest mobility tech fund to invest into the next generation of startups, Rethink Mobility Fund. Welcome.
Good morning, everyone. And yeah, it's fascinating to see all these different approaches here and great ideas. Mind-boggling, to be honest. Yeah, thank you, first of all, to the whole team of Change Now for the invitation, and the BMW Foundation to invite us here today. With me here today is Kira. Hands up, Kira. She's our Chief Impact Hero, so in charge of most of what I'll be saying here today. My name is Matthias. I'm one of the general partners at Rethink Mobility, and our mission is to decarbonize how we move from A to B, how we decarbonize transportation in Europe. So, what do you tell a founder early on that sees opportunities left and right? You tell her, focus. And we focus as well, and we focus on mobility. And why do we focus on mobility? I give you 4 good reasons. Reason number 1, climate change. The transportation sector makes up 25% of greenhouse gas emissions in Europe, and it has proven the toughest to get reduced. Secondly, when we set out, we had inspired by the Green Deal of the EU, we had the ambition towards 2030. How can we get rid of gas and oil by 2030? Now, 84 days into a war, the ambition that we all have is to get away from oil and gas by next winter, basically. Thirdly, cities, livable cities. Now, to fight congestion, to reduce pollution, and to give people access to transportation is top priority on the mayors' agendas across the globe. And that's what we want to support. So what you're looking at is an incredibly complex sector, deeply in transformation. And our ambition is to guide founders through the complexity of this sector, to see through the complexity and to see business opportunities, investment opportunities that make a difference to society. Some observers believe that mobility is the largest business opportunity in the world, heading towards the SDGs in 2030. So, how do we do that? So, first of all, there's a strong impact commitment that we have, and it's guided by an impact framework that walks the talk. And back to Alex from the first panel, including carried interest that is tied to achieving impact goals. We have a clear sector focus that allows us to early identify and better evaluate deals. And we have a group of investors, experienced entrepreneurs, corporates that are all there to support our founders. And of course, we have an entrepreneurial mindset. Ideally, we provide our startups not only deep domain know-how, but also their first customer. And we combine the best of both worlds: financial driven, quick investment decisions, deep impact aspiration, and support. So finally, feel free to join the ride. We are in our first close, which is above what we had expected, and looking for one more impact-oriented investor until the end of the year. Thank you very much.
Thank you, Matthias. Nice timing for you to be here then, it seems. One question. Thank you, Hans.
First of all, let me compliment you on the focus on a big sector, which is, I think, very helpful. However, you've not been very specific on the types of companies that you invest in and how an investment in a reasonably small company can change or support the change of such a big endeavor. Can you give me one example?
Sure. So first of all, we are an early stage investor. Yeah? So that's also where we come from, early stage investments. So what we see is that big ideas do not get funded because they don't fit to something that people have seen. So big generalist VCs feel happy comparing the 10th e-scooter startup with 9 others. But if you invest into something that is really different, it is difficult. I'll give you an example. We're looking into a company in the rail cargo market. Exceedingly tough to get into that market from a startup perspective. With everything that you want, regulation, long processes, orders still sent by fax. So we have identified someone that can make a difference there, a startup, and they don't get funding. Because what do generalist VCs do? I don't know that space. How do you want to make business? You're selling to people that don't like startups, that are not open to innovation. So that's the sort of thing that we want to do.
Okay, great. Thank you, Matthias. Thank you. And next up, so we have a key player in the Latin American landscape who have built a team rooted at the local level. That's Alive Ventures. Welcome.
Hi, everybody. My name is Santiago Alvarez, and I'm one of the co-founders and managing partners of Alive Ventures. At Alive Ventures, we are an investment firm that is seeking to achieve intentionally positive impact returns, as well as attractive financial returns to our investors. And we do that by investing in 3 different sectors. We invest in more than sectors are 3 different themes, in what we call education and pathways to quality jobs to try to bridge the inequality gap in Latin America. In income generation opportunities, businesses that through the use of technology, they support small SMEs across Latin America to scale and to grow, and companies that provide products and services to improve quality of life of low-income population. We were born in 2016 with the support of Acumen as a sponsor. having said that, we're a fully independent for-profit structure, and also with the support of the Inter-American Development Bank as anchor investor. Over the years, we have already closed and invested our first fund of 28 million. We are signatory of the PRI, and we are also one of the founding members of the 2X Challenge, as we have incorporated a gender lens across our investment process. Since 2018, where we had our first close, we've invested in 8 portfolio companies. We have achieved very attractive financial returns of 1.7x cash multiple and 33% IRR. But more interestingly, we have also achieved very positive impact outcomes. Our portfolio has impacted over 10 million lives. 30% of those 10 million is population living under the poverty line, and 60% of those 10 million is population living they are underserved population. We have also channeled over 4x our investment capital into these portfolio companies. We invest in companies in what we call the early growth stage, meaning companies that they already have a track record, companies they have, so you get a sense, over $1 million in revenue. This traditionally would be a pre-Series A or Series A stage. We are an active investor. We take board representations across all our portfolio, and we invest tickets in the range of 500K to 3 million. This is the portfolio we have built so far. As you can notice, primarily focused in Latin America is in Colombia and Peru, where we have offices and local team. But we also invest in companies across other markets that they have expansion plans to Colombia and Peru. Important concentration in our portfolio in education and pathways to quality jobs, but also diversified across different sectors, such as access to energy, agri-industry, and SME lending. We have been backed by very reputable investors in the region. And we feel very proud to be one of the few impact investors in Latin America that have 1/3 of the investors being local, meaning Colombian and Peruvian investors that have supported this thesis. A lot of the financial conglomerates and groups have supported Alive's thesis as a new way of investing. And also, we've been backed sort of by international investors in the US and Europe. We launched at the end of last year our second fund. It's a continuation of our strategy. We want to continue doing what we have been doing. Our first fund was a proof of concept that we have, as showing the track record, has been very successful, and we want to continue doing more of that. It's a fund targeting 80 million and with a first close in Q3 of this year.
Gracias, Santiago. Thank you very much. Question from Alexandre. Thank you.
Hi, Alexandre from Phoenix Capital. How do you explain that concentration towards quality jobs and education companies, and will Fund 2 follow the same concentration?
It's us. I mean, in Latin America, the biggest challenge that we face in the region is inequality. And you have a traditional corporate sector that they say they cannot find sort of the qualified capital that meet their needs. And then you have millions of people sort of without access to jobs. But you do have, you could call it kind of universal education, primary education at least. And so the biggest gap is just quality of education. With the pandemic and the adoption of technology, there has been a significant push in terms of businesses to try to bridge that gap and provide non-formal technical education for people to access jobs. We are being one of the largest players in supporting this new trend and supporting companies that are trying sort of to provide these skills and eliminate barriers to access formal jobs for population.
Cool.
Thank you very much, Annie.
Thank you. So next up, we have an urban sustainability technology fund who announced a huge closing round end of 2021 and are now hunting for gigacorns. Okay, welcome, 2150.
Thanks, everybody. Great to be here. You've stolen all my thunder now. That's okay. Hi, my name is Nicole LeBlanc, and I'm a partner with 2150. I moved from Toronto to Copenhagen at the height of COVID in order to join this fund, and I'm really excited to tell you all about it. So why 2150? All of you know 2050 is an important goal. You're all working towards those goals as part of your organization, and we are too. But one of the important things to think about is it's like when you're on a diet and you do really well and you lose all this weight and you're so excited about how you look and how you feel. But then you can't go out and just eat pizza and hot dogs again because you've put all that work into it, and then it ends up being for naught. So what's really important for us is to make sure that we're not having these same conversations 100 years later in the year 2150. So that's really what we're focused on, is investing in sustainable urban technologies that make cities better places. So cities are where the climate battle will be largely won or lost. And so I have moved from one city to another. I don't know, a show of hands, how many of you here also live in a city? I'm assuming probably the majority of you. Actually, 70% of us will be living in cities by the year 2050. The majority of us actually live in cities now. 80% of the GDP comes from cities, 70% of energy, 70% of emissions. All of these things comes from cities. Cities are so important to fighting this climate crisis. And we all have a higher quality of life by living in cities. And so we're really excited to be working on technologies and working with technologies that can make these cities better places. And if you look at the graph here on your right, it talks about the growth in urban technology. And it's really exciting to see how many other investors, how many other asset classes are also investing in urban tech and really starting to put dollars behind technologies that can make cities better. But what really important thing is to also understand where the emissions are coming from in cities. And so building on the work that Matthias that spoke earlier is doing, mobility has a lot of money going into it, and we want to keep up that momentum because it's so important to decarbonize how you're getting around and how goods are getting around. And what we want to do is double down on some of the other sectors that maybe hasn't seen as much love as mobility has. And so we really are looking at investing across what we call the urban stack. And so we have 4 layers to a city. If you think about, you have digital and physical infrastructure. This enables really everything else from a city to be built upon. Then you can build all of these great buildings and wonderful things on top of this infrastructure that will really enable flexibility and to be able to have wonderful buildings and other types of structures that we can all have as we go about our day. Then you have to operate these assets. And so how do you do so in a way that enables a sustainable lifestyle, a low emission lifestyle, one that's flexible and supports all different kinds of people and all different kinds of lifestyles. And then lastly, how do you make that a really great experience? How do you make sure that everything works when it's supposed to? Certainly moving from a city of 6 million people to a country of 6 million people has definitely eliminated this entire layer of friction I didn't even know existed in my life. And I love being able to cycle to work, and myself and all of my friends, none of us actually own a car, and it's just a wonderful way to live. So being able to have technology to support that is really amazing. And I really want to talk about gigacorns because we are hunting for gigacorns and we're looking for others to come help us with that. And so gigacorns are tech unicorns that can mitigate a gigaton of CO2. And what's really important is they are very elusive, but there's more and more coming. And we really hope that you guys can kind of come on this journey to really help us fight that. Because what's really important is for all of us to really be able to have impact. Because we actually don't believe that you have to sacrifice impact for financial return. We can actually find these amazing technologies that make cities better places to live and be able to meet both our financial and our impact objectives. We've made 8 investments since we closed our fund last year, and across a number of sectors, across 6 different countries. And I'm actually going to be talking with one of them tomorrow, Biomason, which is a biocement company. So if you're around, be sure to come tomorrow morning and check it out. Thank you.
Thank you. Super. Okay, one question.
Thank you very much for the presentation. I have actually 2 questions, but very quick ones. So first of all, how do you ensure that the social as well as the environmental component are taken into consideration, and whether any trade-offs emerged in those 2 components, and how important is to collaborate with public institutions as you operate at city level?
Great question. So we actually have a head of sustainability who's recently published our impact framework, and it actually takes into account all three elements of E, S, and G. The E is easier, it's easier to quantify, so it's sort of where everybody gravitates originally, and that's what we have done. But we also have a number of ways that we're really trying to make sure the S and the G aren't sacrificed. And so we actually put a sustainability clause and a diversity clause in all of our term sheets, and we're partnered with diversity.vc as well to make sure that happens. And if you look at our impact framework, there's actually 4 different elements. Of one is profit and purpose. And so that's really important to us is as we're working with our portfolio companies to be able at the board level to identify various elements of an ESG strategy that they can implement over time in their own companies. And then what was the second part of the question?
Sorry, very quick on the collaboration with cities and
yes.
municipalities.
Yes, so we actually have an advisory board that has a number of people. One of them is Daniel Korski, who is the founder of Public.io that's really helping cities digitize. And the other is Richard Florida, who is a renowned urbanist based in the US. And what's really important for us is to understand not just one city, but multiple cities, and really figure out how our technologies can work within the constructs of existing cities to be able to deploy their solutions at scale.
Thank you. Super sharp answers and nice focus on diversity coming back to one of the opening panel points there. Next up, and on a similar theme, so we have the first European VC for immigrant founders now, and that's Common Ground. Welcome, Guillaume.
Thank you. Let me introduce you to Saeed Sadat. He's the former Minister of Communication in Afghanistan. That's him. He had to flee his country and became a courier when he arrived in Germany. Today, 1 in 95 people in the world are refugees, and 3% of humanity are immigrants. Let me do this. The war in Ukraine, the departure of American troops from Afghanistan last summer, the crisis for Syrian refugees in 2015, not to mention Sudan, Yemen, the situation in Venezuela. We see that migration is scaling up, and it has only begun. Yet our European societies seem overwhelmed. They don't have that capacity to think ahead, and they don't have the capacity to welcome talents, capacities from newcomers. In the meantime, the share of immigrants in the EU as self-employed has doubled in the past decades, from 6% in 2010 to 11% in 2020. That means more entrepreneurs that are looking for a job. So entrepreneurs to get kind of any job, like Saeed. But we know that migrants are also in capacity to build jobs and to be job creators and to contribute to society. But for some reason, they are not on the investment map yet. We still see them as a risk profile where they could be perceived as an asset. 10 years ago, I built an organization called Singa with a couple of friends to prove the contrary. Singa is the first largest ecosystem that brings together local and natives to work on entrepreneurial projects. Our participants are supported by incubators, a business lab which looks like a startup studio, an accelerator, emergency funds. In 10 years, or just actually in the past 5 years, we have trained 1,000 entrepreneurs. We have created 337 successful businesses for 900 jobs. We've seen innovations in education, in health, in finance, in different sectors. Examples are many. We have French entrepreneurs like Donia, who created Meet My Mama to give access to employment to hundreds of migrant women. We have Raiz, who is a Syrian entrepreneur who has created innovation in circular economy. He has created an app to collect metal waste. Today, Singa is scaling up. And the finance arena is a must-go. We believe that a fund for the inclusion of migrant entrepreneurs in the investment map is essential today for change. A fund who would include migrants will have different impacts. The first one is that if you invest on migrant entrepreneurs, you respond to 13 of the 17 sustainable development goals directly. You will invest in diverse teams that are 20% more innovative, and you will create jobs for both native and immigrants. I'm already late, right? Yeah, okay. And tax revenues, and more importantly, you make change. So, how can we work together? In coming weeks, Singa will launch the fundraising period with the management companies. We're currently building financial and technical support, which is a really important team to make that happen. And also, we started to scout entrepreneurs all over Europe to be able to have a really important deal flow. Thank you. You can come to see us. And the team of Singa is here with Revital and Louise.
Awesome. Thank you. And thank you, Guillaume. I gave an extra 20 seconds because Guillaume was one of the first young social entrepreneurs we supported through Changemaker Exchange. So thank you. One question, please. Thank you.
This is Natalia from Springbank Capital. Thank you very much for your presentation. I love the soul of your project or your fund. But for me, it's not clear what are the main requirements for an entrepreneur to be funded by you, other than being a migrant in a foreign country?
So to be refugee or migrant entrepreneur first, because we see that we don't invest in these talents today in Europe. And second is to be innovative and to have a scalable project. And we'll be also looking at all the other impacts connected to the Sustainable Development Goals for their company. So we won't invest in someone that wants to build weapons or something like that. So, but the types of company we've been supporting for the past 10 years, 66% of them were with a social or environmental impact. So this was their focus. So we also see that migrants have that proportion to actually go towards companies who build more communities, who have environmental impact and social impact.
Thank you, Guillaume. Thank you. Okay, next up, we have an African fund run by a team with extensive and comprehensive expertise in the African market and ecosystem. Welcome, Janngo Kapitaal.
Hi everyone, my name is Fatoumata Ba and I'm the founding partner of Janngo Kapitaal. Every year in Africa, we create only 3 million net jobs. Yet, we need to create at least 30 million net jobs to cope with our demographic increase and to employ our youth. Africa represents 15% of the global population, yet we only attract 2% of the VC funding globally. Today, 4 countries concentrate more than 70% of the VC funding on the continent, leaving 50 countries behind. African women are known to be the most entrepreneurial globally. We have a total entrepreneurship activity rate of 26%, which is the highest, yet we have a $42 billion funding gap that could add an extra $300 billion to our GDP, so 10% of extra GDP. Africa today represents less than 4% of emissions globally. Yet, we face the most pressing risks and challenges, from floods to rising waters to rural exodus. And this has to change now, because the clock is ticking. But what if I told you that we don't have any fatality, any resignation, that we can combine profit with purpose? Janngo actually means future or tomorrow in Fulani. And what we do is that we really believe in the power of technology and capital to help leapfrog development in Africa. More concretely, we invest between 50,000 euros and 5 million euros in tech-enabled platforms that are achieving three main things. Number one, they help accelerate and massify the access to essential products or services. It can be food, it can be education, it could be healthcare, it could be financial services for the many. Number two, it helps tens of millions of SMEs in Africa that are the real backbone of the real economy to have access to market, to have access to logistics, to have access to finance. And number three, it also helps create jobs at scale and other distant economic opportunities, directly, indirectly, or induced, with a focus on women and youth. The good news is that change has already started. In particular, for instance, our portfolio company, IMSP, has been sourcing, procuring, and delivering tens of millions of medical supplies in each and every African country since the beginning of the pandemic. In Nigeria, for instance, our portfolio company, Sabi, is platforming the informal retail. To date, 200,000 SMEs and mainly small mini retailers have been able to procure more than $200 million worth of groceries at reduced cost and improved efficiency. In Senegal, for instance, our portfolio company Fleety is really helping revolutionize transportation and mobility. But more excitingly, they're doing it while reducing fuel consumption by 30%. But what we are even more proud about is that we have today a portfolio of 11 companies that are 56% female-led, the highest on the continent, yet delivering superior returns. We have a 5x cash and cash multiple for the previous fund. And that's why it's very important for us to have as many as you as possible, to join us on that journey to leverage technology and capital to help leapfrog development in Africa. And this starts now. So thank you very much. You can come find me and discuss our second close for a 60 million euros fund that is already backed by the EIB, the African Development Bank, by ProParco, and by also more and more institutional and private LPs that believe in our thesis. Thank you very much.
Thank you. Stay there. Wonderful. Thank you. Any questions? Yeah.
Yeah, very interesting angle to be backing VCs in Africa. I think it's pretty key. Have you been able to bring new VCs now from outside, investing in your follow-ons of your company, which I think is you're making a new market, right?
Yeah, absolutely. So we've seen, for instance, our portfolio company Sabi has been raising with prominent VCs such as Norsken. So Norsken, for instance, is a $200 million fund that has been launched by the founder of Klarna, and that is investing in tech in Africa. We have some portfolio companies that are actually raising follow-up round with the like of Bourda or Sequoia. We have actually some portfolio companies that are actually also attracting follow-up rounds by DFIs, such as ProParco. So as we speak now, we have a due diligence ongoing with one of our mobility and transportation deal flow company. And I think it speaks highly to how we need catalytic capital to then create a real commercial value chain that will really be what we need to move from 2% of VC funding to hopefully 15 to 30%, because really we need it to help leapfrog development on the continent. Thank you very much.
Thank you. Okay, so this is now going to be the last pitch before the break, and usually by the time it's the last one, you're like, oh. So let's make sure we give a special energetic welcome to the last pitch before the break as well. The best proof that environmental can only go together with social, that's citizen capital. Welcome.
Hello. Hope you still have a little energy, attention. Yeah, I co-founded Citizen Capital 14 years ago in 2008, before I even knew about impact investing. And the whole issue for us was to use the power of capital to drive change in society. And we've spent these 14 past years investing in companies to show evidence that impact is actually part of value creation. And we're very proud now to have a fund 2 that has a great track record, both on social and financial performance. It seems we're heading towards 20% net return, which is incredible for us. And once I said this, in fact, we want to use this to open new investment paths, because we know, as Cyril said, that startups or high-growth startups won't do it all, and that we have major challenges to take where we can't have double-digit returns. And I want to talk about two very different approaches in the same strategy. To be explicit about what impact is for us, we seek to partner with companies where the impact is at the core of the business model, typically mission-native companies, where the client buys the impact. Ideally, if you remove the impact, there's no business model. Now, for some companies who are not there yet, if we have visionary entrepreneurs, we're happy also to get them there by helping them build impact-based strategies. Second, we look for innovators that have the potential to bring systemic change to unsolved problems, like bring doctors in underserved areas, like digitalizing carbon certification, like upcycling waste, food waste, to bring new raw materials to industries, etc. And three, this is part of our culture, but we focus on what we call fundamental issues, which are deep, resilient markets that are resilient even in low economic cycles. And basically, we look into health issues, aging issues, education, low carbon models. And as a matter of fact, we have several fundraisings at the moment. And I want to talk about share with you a few elements about two very different funds that are emblematic of our strategy as a management company. First, we're now raising Fund 3, which we've made a first closing for 80 million, and we're targeting 120. And Fund 3 basically reflects our core strategy and leads or co-leads tour into 5 to 50 million revenue range. We're aiming at having a balanced portfolio between late-stage growth on one side and expansion with more mature companies on the other, selecting top-level mission-driven entrepreneurs and enabling these companies to build a long-term impact strategy, which with years goes into the culture of the company. Now, we're a société à mission, which is a legal framework in France for mission-driven companies. And our mission, the 16 of us decided our mission is not only raising bigger private equity impact funds, okay? It's also to explore new investment paths to answer needs that are poorly served by the market. And one of them is a social impact bond fund we're working on, which is the first French independent social impact bond fund. I'm finishing, this is the last one. Alongside the unique fund that exists in France today, which is the BNP and an EIF fund, there's a need for investors to go into this new emerging market, which we think is absolutely capital to improve drastically social efficiency for public spending. And we need private actors in here.
Sorry, I have to wrap it. Sorry. Thank you so much. Thank you.
Thank you.
I feel like the bad cop. Question on the front row here. Thanks.
Hi, thanks a lot for the presentation. It's very interesting. I see that you have a lot of experience raising impact funds. So I'm curious to know what's your view on investor additionality. If you think that investors actually do play a role in generating further impact, because I see that you already work with companies that have this embedded into their, business idea. So how do you see this role of the investor, and can you give an example?
First, it's still a big challenge to raise even what we all call now a mainstream impact fund. This is still a challenge. And second, as a management company, our additionality is specifically to be able to use the power of a fund that has, I'd say, an ambitious potential in terms of return and impact, but that will work for startups, high growth SMEs, and to use this base to go and innovate in new paths. And this is probably now where I think we can bring the most additionality, is to continue what we did 15 years ago, is to continue exploring new paths, new investment paths, because there's much to do for farmers, for NGOs, and they need also the private market and not only the state money.